Hey everybody, Rob Maurer here, and today we are talking about a number of different reports on Tesla's registrations in the United States in the months of April and May. Tesla stock, despite some of these reports, finished the day up 1% to $991.79. That compared to the Nasdaq up 0.2%. Alright, so as much as I would love to skip this topic because I think a lot of us know where this is heading, most of the Tesla headlines today are related to a Wall Street Journal article published this morning titled, quote, Tesla registrations plunge in California, data tracker says, end quote. Then leading off the article with, quote, registrations of newly purchased Tesla Inc. vehicles plunged in the critical California market over the past 2 months, according to new data underlining the challenge Chief Executive Elon Musk faces to keep investor enthusiasm that has helped propel the company's share price, end quote. The Wall Street Journal cites data from Dominion Enterprises, which apparently tracks registrations in 24 states that make up about 65% of the US auto market, and in those 24 states, they say that Tesla registrations declined 33% to 14,151 vehicles during the first 2 months of Q2. The media then seemed to go full shocked Pikachu mode and write a whole bunch of articles about this, highlighting Tesla's quote-unquote plunging registrations. So I thought I'd have a little bit of fun with that with the thumbnail today, apologies for that. But the point here is that this should not be surprising at all. People seem to have forgotten that Tesla had their factory shut down for 7 weeks from late March to early May. As we know, Tesla is somewhat unique in that their registration or sales information correlates strongly to their production rather than simply being an indication of demand, like we might see from other automakers. We can easily see this in the inventory numbers. If we look at Tesla, they had 20 days of inventory at the end of Q1, end of March. That comes right from their shareholder letter. And if we look at a company like Ford, for example, they said that at the end of March, they had 100 days of inventory. So 20 days of inventory doesn't get you too far when your factory is shut down for 50 days, compared to if you had 100 days of inventory in stock like Ford does. According to Cox Automotive, many brands actually had more than 100 days of inventory at the end of March, including Honda, Jeep, Cadillac, and Acura, and many others. And then even on the low end, they have Kia as the lowest brand at 43 days. So Tesla's inventory is about 20 to 25% of the average and half of that of the lowest other brand in the US. The other important consideration here, when we look at April and May specifically for the United States, is that because Tesla restarted production in early May, that only gave them a couple or a few weeks to be able to produce vehicles, ship them over to Europe, and have them delivered within Q2. So with that being the case, obviously a very small amount of the vehicles produced in May are going to actually be allocated for the North American market. So yeah, plenty of reasons for us to expect registrations to have been down year over year in April and May in the US. Definitely not a shocked Pikachu type of situation. Even with all that being the case, in this same article, the Wall Street Journal says that Dominion Research says that the industry fell 43% in April and May. Remember, they have Tesla down 33%, so even without much inventory, Tesla is still outperforming the broader industry. You could actually interpret this as a relatively bullish report. The other thing that I want to talk about briefly is the actual number here. So they said that registrations were 14,000 or so in the first 2 months of the quarter. And remember, that's for states that make up about 65% of the total US auto market. Tesla probably penetrates a little bit higher in those markets because it does include California. So if we assume that that's about 75%, then that can point to a number of about 18,500 vehicles registered in the United States in April and May. Now, I'm not putting much weight into these numbers, but that number does seem extremely reasonable. We know that Tesla began the quarter with about 30,000 vehicles in inventory. So if we assume about half of that inventory, or about 15,000 vehicles, were in the United States at the end of March, then for us to have 18,000 vehicles registered in the US in April and May sounds like a pretty reasonable number if Tesla were to sell off some of that inventory, and then we add in deliveries from S and X that are probably not entirely allocated for Europe, as well as Model Y. If anything, I see this report as a low weight indicator that things are roughly on track. One last thing I wanted to point out on this, The Street did run an article separate from my page on this topic, and while I didn't really love the headline, they reached out to me, gave me the opportunity to add some context, and then actually included all of my comments in the article on this topic. So I think this was just a good example of why I did this, is because I want to get that context out to more people. This gives me an opportunity to do that. This article appeared on the Apple Tesla newsfeed, for example, so I thought it was just a good highlight, and hopefully a lot more of things like that to come in the future. The link to that article will be in the show notes if you want to check it out, and thank you, by the way, to those of you that have already popped over to thestreet.com/Tesla, where my page is housed, to start commenting and liking things over there. I really appreciate that. Last thing today is some news from ride-sharing service Lyft. Today they announced that they are committing to reach 100% electric vehicles on the Lyft platform by 2030. We always have to be a bit careful with releases like this to make sure they mean all electric vehicles and not electrified vehicles. Lyft does specify, saying all electric or other zero-emission technologies. Lyft's co-founder and president, John Zimmer, said, quote, "Now more than ever, we need to work together to create cleaner, healthier, and more equitable communities. Success breeds success, and if we do this right, it creates a path for others. If other rideshare and delivery companies, automakers, and rental car companies make this shift, it can be the catalyst for transforming transportation as a whole." End quote. While this is a great goal and a good press release, it remains a little bit unclear exactly how this will be implemented. Kirsten Korosek, a journalist for TechCrunch, tweeted today after reporting on this topic saying, quote, "This is another story that requires some unpacking. Lyft tells me it doesn't plan to ban drivers who have gas-powered vehicles, says it doesn't think it will need to because it will meet its goal without taking that measure. Mark your calendars for 1 decade from now." End quote. So aspirations in the right place, but in terms of the eventual actuality, maybe not such a hard line drawn here by Lyft. Anyway, that'll wrap it up for today. As always, thank you for listening. Don't forget to subscribe and sign up for notifications. Make sure you're following me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Thursday, June 18th episode of Tesla Daily. Thank you.